What's up, guys? Welcome to the channel. In today's video, I want to show you the progress of my passive income portfolio over the past month. So it has a current value of $52,472.98. And I actually lost $916.93 in the past month, which gives me a return of negative 1.72%. However, if I didn't have the dividends, my loss would be a lot higher. And this is actually really bad because when you compare my portfolio to the S&P 500, you can see that it only lost 0.059%. So my portfolio performed a lot worse. And let's sort of look at it, see why. As you can see, my individual stocks have a current value of $27,169.69. They lost over 700, almost $704 for a negative 2.52%. SCHD sitting at $15,640.05, lost $133 for negative 0.85%. And then real estate at $9,663.24, lost almost $80 for negative 0.82%. So it's all pretty high numbers across the board, and they're all significant losses compared to the S&P 500. Now, if we look at my activity feed, you can see I earned a dividend of $5.86 from American Waterworks on September 1st. Then on August 28th, I had one buy, $30.16 of SCHD. Then I deposited the $25 on the 28th. And then I received $5.17 from Clorox. I deposited $25 on the 21st and bought SCHD. And then just over here, I received 8 dividends, which I went over in my previous video of my monthly dividend income. But that ended up being around $60 where I bought SCHD. As also one of my recent videos, I just keep putting money into SCHD. But now I want to go over to track your dividends. It's been a while since I've been on this website, but it has some pretty cool data. So far, my portfolio yield is 3.5%. I've got a yield on cost of 3.76%. My annual expected income is $1,836, which I believe will get around that number, but I do suspect I might get up to $2,000. If we go over to my dividend growth chart, I currently have made $1,258.28 this year. So if I do end up in that $1,856 range, it will be less than what I made in 2022. However, I do believe that my dividend stocks currently are a lot stronger. They're a lot safer, and they have much better dividend growth. So I'm fine to lose money for 1 to 2 years. Next, if we look at my portfolio beta, it's 0.71, which anything under a 1 means that your portfolio is less volatile. If you have over a 1 beta, then your portfolio could see really high swings up and down, and it's a lot riskier. So now I filtered out all my stocks based on annual income. So you can see SCHD currently is expected to bring me $556.90 for a little under a third of my annual income. O Realty brings in $115.05 a year. Mo brings in $92.30. And then DLR, which is one of my newest stocks, is already projected to bring $91.30. So that's pretty cool. Stag at $83.72. Then if I just scroll down here near the bottom, you have Dollar General, which is the lowest at $6.31, followed by Waste Management at $7.42, and then Abbott Labs at $8.57, and then Costco, which is one of my most expensive stocks, if not the most expensive. Well, I think Avgo would be more, but Costco currently sells at $544.25, and I'm only receiving $10.96 a year. However, Costco does have amazing dividend growth. And all right, here we go. Avgo is my most expensive stock at $872.52 with an annual income of $19.33. I bought just enough to buy a little more than one share. My average cost is $615.73. And I actually made a video about Avgo as part of my top three tech stocks for this year. And about a month or two after I made that video, Avgo just shot up and actually significantly tanked the dividend yield. The yield used to be, I think, 3.84%, almost 4%. Now it's 2.11%, but I still think Avgo is going to be one of the best stocks in the next decade. So now I want to go over to my future value of my portfolio. So I have a average 5-year dividend growth rate of 8.5% with a dividend yield once again at 3.5%. My starting annual income for 2023 is $1,836, and this is over the next 10 years. If I don't do anything with my portfolio, just let the dividends reinvest and compound the dividend growth, they expect that my annual income in 2032 will be $5,516. So if that's all the money I'm earning in the next 10 years, that's going to be really low. And honestly, that's not even worth it, I think, to invest. They also expect I'll only have $101,000. So let's look at 20 years. They expect my ending income in 2042 to be almost $23,000. Now, in 20 years, I'll be 51 years old, and my goal is to retire at the latest 50 years old. So, as you can see, $22,827, that's not going to cut it to retire. That wouldn't even pay my mortgage right now. So, if I go to 25 years, I'd be 56. Once again, $47,000 a year. That would be nice if it was like 5 years ago, but in 25 years, after all the inflation we go through, $47,000, it's just not going to be enough. So let's go down here and put my annual contributions at a bare minimum $6,000 a year, then update the chart. And in 10 years, they believe I'll have $9,511 in annual income, which is a lot better than before, but it's still not that good. However, let's go check out the 20 years. So if I just invest $6,000 in 20 years, I project I have an ending portfolio value of $544,000, and I'll be making $46,571, which once again, still not enough money. However, if we go to the 25 years, they project when I'm 56 that I'll be earning $109,000, $1,009,000 with an extra 286 and change, which I think even in 25 years, 109,000, almost 110,000 would be a decent income. And you could probably live off of that, especially once the house is paid off. But now I want to go back to 10 years and see what would happen if I invested more money, like $10,000. And this is actually really cool to just go on this website. It's absolutely free and just play around with it, add your portfolio so you can see all the data. So in 10 years, if I put $10,000 a year, I'll have an ending annual income of $12,146, which to me, I think that would be a good amount of money because earning $1,000 a month on average would just bring a lot of financial security to me, and I believe a lot of you guys watching and the majority of people in America, because most people can't afford a $400 emergency. So having extra $1,000 on average a month would be absolutely insane. Then we go over to 20 years and they project that I'll be earning $62,000 a year in passive income, which I actually think that'd be pretty good. That could pay for the mortgage and have like an extra 20 something grand left over. to probably go on vacations or just do whatever. Then if we go to 25 years at $10,000 a year, I'd be making $146,000 a year. I think that I'd be able to have a pretty good lifestyle at that point. So this is just a cool chart to look at. Then let's go over to my diversification. Let's see, they have my total holdings at 34. My largest is SCHD at 29.8%. And I don't know if that's actually, let's check M1 Finance. Oh yeah, that is accurate. 29.8%. My total sectors, they say, are 10. Largest equity wants SCHD. Income diversity, 33 payers. Should every stock should pay a dividend. My highest yield is Altria Group at 8.9%. My largest income is SCHD at $557. And then it's saying that my sector exposure is cyclical at 22.11%, defensive at 34.37%. I do have a lot of defensive stocks. I got that way after the pandemic because I owned a lot of riskier stocks that didn't perform very well. Some of them actually cut their dividends. So I just wanted to create a portfolio that was really recession proof and pandemic proof, just owning a lot of stocks that are essential, like when you go to Costco, General Mills, Colgate, Clorox, and so on, stocks like that, Hormel Foods, there's stuff that you absolutely have to buy. And also you could add that into my utilities like Southern Company and Duke. So it says sensitive stocks. I have 13.71%. It's putting technology in sensitive at 9.32%. I believe the technology stocks I do own are very safe and very strong stocks. If we go over here to my individual stocks, you can see one of my tech stocks is Microsoft, which is an amazing company. And in fact, Microsoft might actually be a better company than Avgo in the next decade. But then we have Texas Instruments, another great tech stock. IBM, that could be the riskier tech stock that I have, but it looks like they're starting to turn around. Then I have Avgo, which I think will be an amazing tech stock in the next decade. And so looking at my tech exposure, I don't think it's that risky. I'm really confident in my tech stocks. And then they just have ETFs funds at 29.8%. So guys, that is a breakdown of my stock portfolio. Thank you for watching the video, and I will see you next time.